rest of the world is moving in a different direction. I'm talking about the emerging markets world, China, India, Brazil, even Russia, and many of these other markets like Turkey, South Africa, and so forth. These are all changing in a dramatic way. And of course, what's happening in the so-called frontier markets is even more dramatic. The changes in economic growth are going to be quite revealing as we go forward. So I think we've got to, of course, America is the largest economy in the world, but they don't dominate the world. There are other things happening. And even in the US, we're looking at 2–3% growth, which is not too bad considering what we've been through.
You don't believe in the possibility of a double dip. Goldman Sachs says there's a 30% chance of that happening.
There may be a 30% chance of that happening, but it's 30%, not 100%.
A third?
I really don't see that happening. I don't see that in this environment. Double dip, as you know, the name originated during the Great Depression, when the government did not pump enough money into the system and there was a relapse in the economy. We don't have that now. There's a lot of liquidity being pumped into the system. And of course, as a result of what happened in Greece, everyone expected that before Greece, okay, there's going to be a slowdown in money supply and liquidity will come down. Now that's not going to happen because both the Europeans and the Americans are really afraid of the so-called double dip.
Brazil is still one of your favorites. Why is that?
Brazil has everything. They've got complete agriculture. They export agriculture, so they're self-sufficient in food. They've got minerals that they export, iron ore, copper, you name it, they've got it. They've got a real change in the per capita income orientation. There's a wider spread of incomes now. There's the discrepancy between the very rich and the very poor is now narrowing as a result of policies that Lula instituted. They've got oil. They've got these enormous resources of oil offshore Brazil. So they've got everything. And
what are you buying?
In Brazil, we like the banks to begin with, and the mining companies. Companies like Vale do Rio Doce, great companies exporting iron ore and other products. And in the case of the banks are among the best in the world in terms of profitability. They've been through hyperinflation, survived that. They know how to approach the retail customers. So we like them.
When you take a look at emerging markets in Asia, for instance, those which have done well include Indonesia, Thailand. Do you like these markets?
Thailand in particular, and Indonesia as well. We do have holdings in Indonesia, but we like Thailand a little better, and we have a larger weighting in Thailand. We've liked Thailand through all of this turmoil that you've seen in Thailand.
Why, Mark? I mean, the political instability has always limited the gains that you see in Thailand.
Yes, it's true that they've had all this political turmoil, but we've lived through this for the last 30 years. I mean, we've been investing in Thailand for over 20 years, and I've been in and out of Thailand for over 30 years. And there's coup after coup, changes of government and so forth, but life goes on. We learn that companies are able to survive these changes.